All right. Hello from LevelUp. Welcome to the M&A in the post-IDFA world. We have Marina Andersson from Stillfront and Chris Petrovic from FunPlus. Both are responsible for insane amounts of M&A in this industry. So quickly, I wanted to get your introductions on your background and what you actually do for the company. And I know Chris Petrovic has moved to a new role at FunPlus, so be interested to hear what the role is there. So let's start with Marina. What's your background and what do you do at Stillfront?
Thank you, Eric. Well, I am Marina. My origins are from St. Petersburg in Russia, but I've spent the most part of my adult life in Sweden, mostly in Stockholm. I joined Stillfront for a couple of years ago, January 2019. And since I joined, I had pleasure to lead 8 of our acquisitions. So when I joined, we were 11 studios, and as of today, we are 19 studios. Before that, I spent approximately 20 years, a horrible amount of years, in M&A advisory and also investment management. I started in a local investment bank, Carnegie, year 2000, and then 2003 I moved to an investment company or VC company, D7, where the founding partner of the company, the managing partner, was actually Jörgen Larsson, and probably it's the name you recognize. It's the founder of Stillfront. So that's my connection to this person who I liked already at that time and who I kept in contact with. Then I changed to another bank, which was ICE Capital Securities, and then Deloitte. And in autumn 2018, I was asked by Jörgen, we kept in touch during the years, whether I would be interested to join Stillfront. And of course, I could not say no. So in January, I joined to head M&A. It was not many people at headquarters at that time. We were only a few. And it's how my journey here began. So, and I've been very happy to participate in that during more than 2 years now.
And Mr. Petrovic.
Awesome. Thanks, Eric. Glad to be here, everybody. Marina, good to see you. So Chris Petrovic, as Eric said, I recently joined FunPlus as Chief Business Officer. For those that don't know, it's a privately held independent mobile gaming company. I like to refer to as one of the biggest little companies that nobody's heard of. I moved with my family in the beginning of this year to the corporate headquarters in the Zurich area in Switzerland. So Marina and I are now in the same time zone, which is great, or similar time zone. And before that, I had the privilege of working at Zynga as part of the senior management team, where I had corporate strategy, M&A, and business development. And Eric, as you alluded to, we were lucky enough to do quite a bit of M&A during my time there, and brought in a handful of talented teams and businesses that have helped Zynga grow, and vice versa, and have just been thrilled with the results there. And my career has spanned over 20 years, 15 of which have been in and around mobile and gaming. So have seen many of the cycles that we're experiencing today, and excited for the future growth of this industry.
Yeah, and my quick introduction, I do this podcast called Deconstructor of Fun, which some of you may have listened to, but I do an advisory for primarily financial stakeholders. So at my firm, Cosmer Consulting, for hedge funds and long onlys, and then I consult for Warner Brothers. So, all right, moving forward, let's see here. So we are looking at the pre-IDFA world with M&A and the post-IDFA world of M&A with IDFA. And I guess, generally speaking, the competition for targets has been pretty fierce out there, right? There's so much M&A out there going on. These companies that have been around for decades are getting swallowed up by you guys, as well as other acquisitions, things like Codemasters, Glue, Bethesda, Gearbox, etc. So the question is, with IDFA on the horizon, and also with these valuations, do you guys think that these valuations are stretched? Do you think, are we at the beginning or the end or the middle of this, M&A frenzy? I'll start with Marina.
Well, definitely it's difficult not to know that the valuations in the industry have gone up. So this has happened indeed. And in some transactions, I've been wondering, so how can it actually be possible? What we expect from IDFA, we see it as an opportunity. Probably there will be more smaller studios out there because they will have difficulties to compete on their own. And from Stillfront point of view, so yes, we've seen increasing valuations in the market, but we still believe that and not only believe, but we did manage to do acquisitions at very attractive levels of multiples during the past years. And we believe it's our approach, so we can offer something very attractive for the founder-owned studios who join Stillfront. So it's not that we are trying to attract them with the highest multiples, top dollar multiples and valuations upfront. It's more that we can offer growing as a part of Stillfront family, and we're doing a lot of pre-work when we meet those founders. So although valuations are probably going up, so we still believe that we can do M&A at attractive levels.
Petrovic?
Yeah, I think echoing Marina's sentiment, I think there's a difference that we need to acknowledge in the marketplace between public market transactions, whether through direct listings, public listings, SPAC, takeouts like Glue. All of these things are very visible and transacting at a premium for various reasons, dealing with the dynamics of those particular mechanisms, right? So there's a kind of understanding that when you take out a public company, that there's a control premium that you have to pay in order for the shareholders to say yes. The SPAC dynamics, which are a whole different conversation, are such that it's creating a lot of competition and a lot of frothiness from institutional investors to want to get into gaming in a more direct way. And then obviously the public market pressures of going public ascribe really high multiples and valuations to companies like Roblox that's, while successful, still have to live up to that. I think for the kind of M&A that Marina and I do, it's still quite rational and disciplined and structured in such a way that it creates win-win scenarios for both the buyers and the sellers to create and maintain a long-term healthy relationship. And as I always say, the goal is to create a 1 + 1 = 3 calculus when you bring the two entities together. And for those of us that are rational and disciplined, there's always a threshold above which you're not going to pay. And then that's just a higher risk for somebody else that either is willing to take that risk or can bear the risk financially. And I think if we maintain the discipline and the rigor, we don't have to worry about the fear of missing out, because on the merits, these transactions would be dilutive or put downward pressure on our company and on our companies or on stock. And so I do think that there is still rationality in the market and will continue to be. And I think now post IDFA, as Marina mentioned, I think there will be just more volume of opportunities of great teams that may find a little bit of stress around continuing to operate on their own and looking for homes at companies that have scale, that have synergies, that have infrastructure that can help them weather the storm. So I actually think it's going to continue to be pretty active and pretty rational.
All right, to push back a little bit on this one, because what I'm seeing is valuations that are relatively insane, particularly for something like Glue, right? Let's just use that as an example, since everyone knows my feelings on Glue at this point. But if my historical understanding is that public values kind of set the multiples and set the tone for even private values, and expectations from targets go up based upon the valuations that they see in the marketplace. And when things like Roblox are going to go out at probably $40 to $50 billion and Glue gets bought for $2.2 billion, which is just amazing, it feels like it gets harder and harder to get deals done with these small teams. But so is that kind of not the way it works, or is it that you guys have been doing this so long, how to manage that risk and not pay too much? What do you think, Marina?
Yeah. Oh, sorry. Go ahead, Marina.
Go ahead.
Yeah, but I would say yes, of course. So like public valuations impact the expectations from people who are considering what is the next step. But not every company, not every founder-owned studio is suitable for a public offering, right? So it requires size, and although there is a picture of the valuations increasing and they see the transactions, the public transactions in the market, So it's just not the right path for every studio, right? So it's about educating them and reaching out and talking to people. So we do believe a lot in like meeting founders and speaking to them and explaining the difference between what we can contribute if they join Stillfront and what they can achieve, like being acquired by SPAC or being part of SPAC. And to the question of SPACs, it requires also a certain size. So it's not like only benefits in that, right? So it's a big difference. So I think it's like different people who see value in joining Stillfront and our knowledge and platform that we can bring to the founders as compared to those who are capable and interested to choose the public path.
Yeah, and I'll channel our friends in the sell side investment banker community that if they were here, I would say that they would say the same thing, which is, you know, their job is to manage expectations of their clients. And I would say to anybody that's trying to comp themselves to either Roblox or Glue, that if your business looks anything like it, either in substance or in form, meaning you're either a public company or you're a social platform with the massive UGC efforts, then you deserve that valuation. But if you're not, then those things are irrelevant to me as a buyer. What's relevant to me is the performance of your business over time, the future view that you have of your business and how much you're willing to stand behind that future view. And I'll gladly compensate you for that. But I don't bring in public company multiples into the analysis because I'm not buying public companies by and large. And if I am, then there's a scripted kind of premium that the market understands, and which is what Glue got to kind of, I would argue, on the higher end. But for public to private or private to private, these are really bespoke individual deals that rely on the specific characteristics of that company, and not at all ascribing value to what we see out in the public market.
And just to continue a little bit on that, like we have a good benchmark, right? So normally I would say, so guys, we're like diversified portfolio of companies, we're a family that contribute knowledge and collaborations to each other and look at our own multiples. So it's just not reasonable that we're offering you something that's above our own valuation. So it's also an argument in this kind of discussions.
Yeah.
Right. So, but not to pick on Glue, but I mean, Glue was trading at 10% margin. So I don't know. What did they get? Like 60% EBIT or something, 60 times EBIT? You know, it's like, so even EA was overpaying for something, for an asset that I question the value of. But
they're
anyway.
in a unique position. They're in a unique position to be able to rationalize it, A, and B, to hide it. So
right. Because they're so huge, they have to hide
That's
it.
right. Yeah.
There's no other smaller company that would have acquired that.
Right.
All right. So I guess the other question I would like to know is, like, now you guys have primarily been involved with acquiring studios, like studios and game companies, et cetera. Is there other types of things that you guys are looking at from a strategic perspective, like enabling technologies, like, you know, middleware, or other things like social things like that, that don't fit within the same mold as another developer? Actually, Marina, it'd be interesting to see how you guys are approaching this, given your decentralized kind of approach.
Well, I work very closely with our business management team. So my background is M&A advisor, right, and investment banking. So in strategic evaluations, I always work close with our CEO, Alexis Bond, who I know well, with our product responsible, Philip, to bring in this knowledge. And of course, so continuously when we have our strategic discussions, we are evaluating the relevant trends and what would be beneficial for us to take part of. So we are following the trends and trying to position ourselves in the right way. So, but how exactly, you know, what directions we are looking in, I could not comment more than what has been communicated publicly, as we are a listed company. Looking to complement our portfolio, acquiring studios, it has been our focus until now, right? So, and then it would be primarily adding balance in the portfolio within the genres where we are, to increase the addressable market, to diversify portfolio, to mitigate risk, to broaden our audience. So it's where we've been focusing, and it's what you've seen in our acquisitions. And then also, as we communicated, so now we are more actively looking to acquire assets, because we do note and we know that studios are out there, a lot of very attractive candidates to join Stillfront, but sooner or later, probably there are not so many studios as of today. But then there still will be assets like attractive games that are probably misplaced as of today and could be better placed within Stillfront. But that's just on the same area, right? So we've been now. Right. And then we are definitely continually evaluating trends, as you mentioned several.
So to be a little bit more clear, like, so we're getting into a situation where like social, like, metaverse type platforms and, Discord and things like that are enabling technologies are kind of moving things forward in the industry. And I'm wondering, are those on the radar of you guys? What do you think, Chris?
Yeah, I think just to reference back to my time at Zynga, and if you look at some of the public statements that have been made recently, including the team that they acquired to go after cross-platform, and their comments around, wanting to continue to invest in building their advertising business and what that means from a capabilities perspective. And then if you listen to what Marina just said, you see that what's available is not uniformly looked at by all companies the same way, because each company has charted its own strategic path in terms of what they feel is important for them, their growth in the next medium to long term, 3 to 5 years. So where Marina has a certain set of requirements and areas of focus that build on the success and the foundation of what Stillfront has, Zynga and its management team came up with a handful of pillars that it wanted to execute on, starting with solidifying its position as a purveyor of forever franchises and mobile, and now cross-platform, and now doubling down on advertising business, as evidenced by what they said, and also the acquisition of the hyper-casual studio Rollic. So really a long-winded way of saying that each company has its own version of what they think is interesting, attractive, and can be additive to their business. So just because it's available doesn't mean it's going to fit. And I think the other variable, Eric, going into enabling technologies, is that I've always been a little bit nervous about that from a game company perspective, in the sense that you're looking at an enabling technology that wants to sell itself and should sell itself for full value based on the business that it's created. But if you want only a part of that business and don't want to run, for example, its current client base, many of whom may be fellow game companies that are now your competitors, there's inherently a tension in buying something for full value that you just want to extract partial value from, and then trying to recreate the delta there. So in other words, if a game company wants to buy an ad network, and that ad network has 80% of its business from other gaming companies, will those game companies stay? Does the acquirer want to keep that line of business, or does it want to redirect the resources toward its own portfolio? So there are just a lot of considerations that make these things a little more volatile than you would otherwise think. But people look at Discord and they look at Roblox, and they think, these are scaled audiences and platforms get valued differently than game companies. Right. And so that's obviously another consideration that people think about when they want to architect for the future.
I guess the last one for both of y'all, but is, are there any transactions out there that you look at and you're like, what is going on the valuation side or strategic side? I mean, I can name 5 off the top of my head, which include Glue, Codemasters, Bethesda, Gearbox. That's 4. But are any of those, any acquisitions that you look at, like what is going on, like that scare you, Mr. Petrovic?
I don't know that anything scares me. I think it just, I marvel at trying to engineer in my head the logic behind them. And some of these are more obvious than others. Like, so for example, the Gearbox one, and knowing Randy and the team there, like that one caught me off guard. And it's either going to be a masterstroke of genius or an unmitigated disaster, right? And I think there's nowhere in the middle that's going to fall out. And I tend to want to be optimistic and lean into the stroke of genius, because if I'm Randy and I have a company that I own a lot of that's very valuable, and I get a lot of equity in an emerging public company, and I'm confident in my company's ability to execute, the future value of my current equity is going to be worth a lot more in the public market than it is as a private company. So he may have just looked at this as as the right size company with the right stock structure to be able to do that more than if you would have been in a behemoth like Microsoft or EA or even Zynga. So again, it's different strokes for different folks, but I'm appreciative of the creativity, and I like that because it actually stokes critical thinking by all of us about what's possible, and how to reach across the aisle to companies that you wouldn't otherwise think. But again, you won't know until much later in the future if our current thinking is correct.
Yeah, I'll take the under on Gearbox, but that's just me. How about you, Marina?
Well, yeah, definitely. Sometimes I'm wondering how the calculation has been made. But just to echo on what Chris just said, so you need to know the strategic rationale, what the buyer had when they've been doing the evaluation of the deal. So, and we do not always have this information, so it's very difficult to judge what kind of synergies they've been calculating upon, and what is this additional strategic value that we probably do not see always. So, and well, another part of that, then in certain transactions, how they're communicated, right? So we do not always know exactly how the multiple has been calculated. So probably it's based upon historical figures, and it's not just incredibly high as it looks to be. But primarily, it's always very difficult to see, the strategic rationale of the buyer when you were not part of the team evaluating the deal.
Very well, we can look at it through our own lens and make our own internal determination as to whether or not we would have done that deal at that price. So, that's the fun internal conversations about either, wow, that was genius, or man, I can't believe they paid that much money for that based on what I know. So,
right,
yeah.
All right. So specifically for Chris, my understanding, I looked into it a little bit, and I know FunPlus. I worked with you guys a little bit in the past. Very, very smart people. But you guys never have done acquisitions at FunPlus that I am aware of.
No.
So will your approach at FunPlus be, significantly different than it was at Zynga and Kabam, or is it kind of more the same, like boiling the ocean and finding the opportunities that fit within your structure and your strategy? Is there anything that's unique about what you're going to be doing at FunPlus versus Zynga and Kabam?
I think at a high level, probably no, but at a more granular level, just the order of operations will probably be a little different. To your point, I came into a company here that has not flexed the M&A muscle before, and that's part of the rationale for having, for me joining the team here is to help that grow. But in the meantime, there's still a lot of opportunity through other mechanisms to grow the business, both organically and inorganically. The company has a great lineage in investing in innovative early stage companies, deploying a lot of capital in the marketplace, and also hiring great talent around the world to build new games. And they come from a people and product focused mentality for the last 10 years. And as you know, the founders already had one successful exit for the web gaming part of their business, and now have recreated success and more on the mobile side. And so, they really are confident in their ability to support innovative teams building great products and services. And if acquisition is a way to accelerate that innovation, great. But there's a long-term view here, and I think it's the one thing that's going to be different for me, and I think Marina can appreciate this, is being now back in the private company realm, like you and I were, Kress, at Kabam. There's a different cadence than there is for public companies. That's right. We don't have the artificial kind of market pressure, if you will, which is a little bit of a sigh of relief and kind of a nice change. Not that the Zynga experience wasn't phenomenal and actually taught you a lot of best practices, but it's just there's a different outlook and a different view. And as a founder-led organization, as Marina also knows, just being surrounded by them, it's a different viewpoint than a corporate one or a board involved one or a shareholder one. So it'll be fun because there's still a lot to do, and the company has been tremendously successful up to this point, and hopefully we'll be able to do more of that.
Yeah, and for those of you that don't know FunPlus, Andy this is his second company that is over $1 billion worth, right? So he sold the first one for $1 billion, and this company is worth multiple billions. So Andy is an animal, right? The guy really knows what he's doing, and he's like super sharp. And so I'm looking forward to seeing how you guys grow from here.
Me too.
And yeah, for Marina, now I don't want to get I've been a little bit critical, honestly, about Stillfront and Embracer, these aggregators over the last year or so. So I don't want to get too, in your face about this, but from my perspective, your model makes sense, right? The city-state model works in gaming for sure. I Frank Gibeau said this at Zynga and at EA for that matter. And I do fundamentally believe that. Having said that, when you're acquiring such a group of disparate assets and studios all over the planet, really, it creates lots of challenges. And maybe I'm in my old school thinking from the EA days. Maybe, I am old. I'm almost 50, right? So I'm past my prime. But the one thing that's been kind of true in my whole career is that managing creatives is the hardest thing to do in this business. Like, it's really, really hard to keep them to task and getting things out because they always want to make things perfect and better and better and better. So my question to you guys, as one of the consolidators, you and Embracer in particular, and there's a few others, what is the strategy for actually managing all these disparate assets? You say you have 19 studios. I think that's actually more studios than EA. I think it's definitely more studios than Zynga. It's like, how do you plan on actually rallying the troops and creating a cohesive strategy and SKU plan that they can execute against going forward? That's my biggest question about you and Embracer, for that matter, with all these disparate assets. So can you articulate how that works within Stillfront?
Well, thank you for the question. So actually, the background, I think the question is probably more for Jürgen than myself, but he had this philosophy that he explained for me when I joined Stillfront, based on his previous experience of leading listed companies, building listed companies, and being entrepreneur himself. So you cannot bring independent creative people together and then structure it, consolidate it, and kind of, do some post-merger integration and put it all together, because it would not be appreciated. So what we are looking for is studios who can contribute some strategic value for Stillfront Group, and at the same time who can leverage on the knowledge, on the data we have, and the collaborations within the group. So just looking at our most recent acquisitions like Moonfrog, Superfree, Sandbox, all of those can be seen as very different, and the question can be asked, so why and how are we just stacking studios upon each other to do size and to leverage on that on growth and size and being public company? But that's not really the case, right? So behind each acquisition there is strategic thinking. Like, for example, Moonfrog, we've been looking quite for a while to enter Indian subcontinent, so that's the reason for that, and we are now having platform there for further expansion. Sandbox, so we've been speaking a lot about convergence and cross-platform. So it's how we established or strengthened our position there, acquiring Sandbox. So we see a lot of potential there. And Superfree. So with Superfree, it was like entering more the word genre where we were not present, and also adding competence within ad monetization, which was not our strong side before then. So, and now it's just, from December until now, those 3 acquisitions, they already started contributing a lot knowledge, a lot of competence that we didn't have within the group to the group. And this analysis of what they contribute and how we move in our next strategic step, it's done continuously, and evaluation is started in very early talks with each studio. So we're developing growth plan and what we can do on collaboration level. So,
okay. And finally, just one more bonus question, I suppose, is, based upon the name of the title of this this talk, is in post IDFA, are there any targets that are off the table? So a lot of the core games are at risk because UA arbitrage is not going to be as effective. Are you guys looking more casual? I know Chris in particular, FunPlus is basically, as far as I can tell, basically almost 100%, core strategy games, high LTVs and UA arbitrage central, right? So is part of the goal to like move more down the down the casual spectrum and get more mid-core and more casual? Is that where things are going to be going? Is that where new studios should be focusing their attention? Or I don't want to go too down the rabbit hole of IDFA, but
Yeah.
what's your thoughts there, generally speaking, as you go forward versus, for example, to be clear, like when you were at Zynga, you acquired some really, really high LTV, UA arbitrage, small, giant, even peak for that matter, and Graham. Is that strategy going to change post IDFA in your view?
Yeah, so yeah, we do have to give a nod since it is the title of this panel, but I think the one thing that's going to change is there's going to be a healthy amount of I don't know if skepticism is too wrong of a word, but when you start engaging with companies that like to show their forward-looking thinking about their business, and if advertising is a material part of that business, there's going to probably be some hesitancy in either hesitancy in agreeing with that management's view until there's enough data out there to show what is the actual reality, or if the management team feels really strongly about their conviction and continuing to grow the ad part of their business, then you structure a deal that allows them to do that, and create a win-win if they do reach it and if they do believe their own views on it. So there's ways to mitigate from an M&A perspective. So I don't think that IDFA is necessarily going to materially alter the cadence or the volume of M&A. I think it'll just, on the margins, perhaps more fine-tune the economic structures. And yes, to your point, single genre companies, especially on the core side, should be looking to diversify. And the fortunate thing is that FunPlus has made a lot of investments in other genres, mid-core and casual, long before I got here. So that's already well underway. And I think there's just a general sense of maybe, I don't know if optimism is the right word, but just hopefulness that because this is an issue that's affecting the entire industry categorically, that we're all going to be in this together. There may be some entities that are more marginalized, incrementally than others, but at the end of the day, we're all invested in figuring it out together, both us, the ad networks, everybody. And so I do think that there's going to be a new floor or a new normal that we're all going to operate against. And as Marina alluded to earlier, maybe some subscale companies may be more affected because their marketing dollars, the limited dollars that they have, cannot go as far. But by and large, I think we'll be out of 2021. I think we'll be, kind of more smooth sailing. But this year will be rocky because we're figuring out IDFA, and a lot of us are under pressure to deliver at or above what we delivered last year, public or private. So I think those combined factors are going to cause 2021 to be as unique as 2020. But for different reasons.
Yeah, certainly Apple is not part of that contingent of people that's working on our behalf. They're working kind of against everybody, it seems, at this point.
Come on, SK Ad Network. I mean, come on.
What do you think, Marina? Any thoughts there?
Yeah, so we are looking for new opportunities coming out of IDFA. So I agree with Chris on that. So, and for us, it has been all about balancing our portfolio, right? So looking for new genres to match our core product segments where we are as of today. So it's what we have been doing. So evergreen has been very important for us. So we'll continue working on that and looking for best founder-owned studios to complement our portfolio.
All right, that's the end of the session. Thank you, Chris and Marina, for joining us. Good luck going forward in this new 2021. And we'll talk to you both soon.
Thank you.
Thank you.